Okay, this is the fourth weekly commentary. This week this is a good week for weekly commentary. There's a lot of stuff that you lot can learn from this. There's a lot of new people that joined this month. I think, not this month, within the last week, I think maybe 25% of the 50 spaces joined this week. So they won't be up to date with the content. However, this is going to be the first weekly commentary of when they joined. So when they see this, this is going to be their first weekly commentary with the mentorship. Now, this week, just take off the drawings. So, what happened last week? Last week, right? What did we say? We came up into this gap. Remember, we came up into this gap that we said. And what did this candle leave? An imbalance. So what did we want to see from the last weekly commentary or one of the last videos that I did upload? We saw rejection from here, and then we wanted to see what? We wanted to see downside because this week had a lot of upside. We wanted to see a rebalance within this upside, and you can see that the market done it to a T. This wick just touches it so perfectly. The high of this week, yeah, put your attention to here, the OHLC. The high comes in at 97.735 and this low comes in at 97.712. So it digs a bit into it, nonetheless, it perfectly closes it. So let's look at how the dollar traded. Our overall bias was that we wanted to see the dollar trade lower into this gap, right? So let's go on the hourly chart and see how the dollar done it. Now, this was the imbalance that we wanted to target as well, this volume imbalance, and you see the market did come and close it perfectly. If you're new, each day is has its own portion. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Friday is smaller because there's less time traded on the Friday. It's not a 24-hour market on the Friday. It's only open for it closes at 10 p.m. our time. All my times are to New York UTC -5. This is the New York time, and I'm gonna teach you guys as well. My days aren't from 10. They're not from 10. They're from midnight. There's a reason why, and I'll go into that. So let's see how the dollar traded. Monday, high of the week. What did Monday do though? This is, if we see this high is the previous week's high of the week. What do we see? We see price run the previous high of the week. So anyone that was willing to buy above here or short here, they are now their liquidity is taken. Then we come trade lower and we're just going sideways consolidating for some time. Looking at Forex Factory, Thursday was the day, Wednesday and Thursday were the 2 days we wanted to see the big moves happen. And we see that Wednesday and Thursday have the major moves. Tuesday, what do we see? There's not much going on. Wednesday, when the news comes, we see it drop. If you go on a 15-minute chart, this is what it looks like. Consolidation. This is something you don't want to trade in here. You want to see a clear break to one side. Now, we break down lower right here. Right here, we still don't know if it's going sideways. When price comes up and fills the 50% of this gap and breaks down lower, that is a good confirmation that price is willing to go lower. Why? Let's go back to what the algorithm does, and let's go back to when the algorithm is dictating higher or lower prices. The algorithm does what? Delivers liquidity as well as rebalancing areas of imbalance. If the market was, you know, prone to go high, it was intended to go higher, let's say, these imbalances would not be respected. Price will be trading above it. However, we see the 50%, we see price breakdown lower and that the retracement up respects the 50% of an imbalance. And then we see price come back down. What does that mean? That means that the algorithm is respecting bearish scenarios as it's reacting off of bearish imbalances after breaking a low. Yeah. Also, the higher time frame narrative was what we were looking for the DXY to become bearish to rebalance the areas of imbalances. We were looking to rebalance this whole imbalance left here on the 15, and on the weekly we wanted to rebalance this candle's body to this wick. That's the longer line that's delineated across the entire all the days. Oh, internet's a bit slow. We break down lower and we continue breaking down lower. Every single time we break down lower, we have an entry on a fair value gap. So we come here. This is called a rejection block. We react off the rejection block and we break down lower. Let me zoom into this candle. This is the candle I want you to pay attention to now. This candle's imbalance starts from this candle's wick. This candle wicks above it, pretty much fills in the whole imbalance, and we break down lower, break down lower, break down lower. Again, this candle has imbalance, comes up to it, fills it, and breaks down lower. This candle has imbalance from this wick to this tiny little wick here, and the market comes up on the retracement and it fills it. Do you see how whenever there is a candle with a large body price and is bearish, still now bearish on the dollar, do you see how price comes up, fills the body of the candle, the imbalance, and then the market drives down lower? This is clear signatures for lower prices. And what's it driving into? What is price? What is the magnet that is drawing price lower? The fact that the market, the algorithm needs to rebalance that weekly area of imbalance. That's our higher time frame draw on liquidity. Then the market comes here, it gaps higher. Now this gap needs to be filled. We're still not at the weekly objective. Price comes up higher, clears liquidity, and ultimately we fill the imbalance. Now, as soon as the imbalance is filled, look at how the algorithm reprices so aggressively to the upside. We reprice immediately to the upside. We break the structure. This is a breaker. We go lower, higher. I'll teach you this. I'll teach you guys that. This up candle right here is the breaker block. We test that breaker block exactly to the pip. Look at this wick and this candle. The opening of that candle, it comes exactly to it. And then we reprice higher, taking out this low. And my bias is I want to see a stronger dollar for this week. Going on to the daily, if I remove the drawings, we can see that the market is prone to take out the high. However, there is also imbalance left within this candle now. So I'd like to see at the start of the week, perhaps we come down lower within the candle. We rebalance the candle, not all of it, but we rebalance it to a certain extent, and then we shoot off higher. So that was going on with the DXY. What would be going on with the Euro USD? The opposite will happen in the Euro dollar. Now I have something different for you guys this time as well, which I think you lot will benefit from. So this candle had big imbalance. We wanted to see Euro USD rebalance that area of imbalance before looking for lower prices. And it done just that. On the daily, we see that it comes up. This in here is your bearish breaker, this wick. This candle is your bearish breaker, but because this candle's wick also goes lower, which is, you can view this candle, right? This candle, you can view as two candles, if you like. You can view it as a bearish and a bullish candle. You can view it, the bottom bit, as one bearish candle, and the top bit as a bullish candle that closes a bit lower. This candle's wick comes straight down to here. That is the bearish breaker, and we react lower. As well as the bearish breaker, it lines up with the weekly imbalance. So this is Euro USD, and it traded so perfectly. If after this weekly commentary, if you don't see that the market is rigged, then there is nothing else I can do to prove to you that this market is manipulated to perfection. So this was the previous week's low. The market drives down lower and clears that external liquidity from previous week's low. Then we drive up higher. This is now an order block. The last down candle before the move up, this becomes an order block. You can see that price comes to the 50% of the order block. And if you're wondering why does it sometimes come to the 50 and why does it sometimes come to the open? When you compute or code an algorithm, you need to code it with simplicity and logic. For example, the algorithm doesn't have eyes, it doesn't see these candles. It works off two things, which is price and time. Okay? Price and time. It doesn't view this candle, it doesn't see this candle, this down candle. What it sees though is the candle's price. It knows that the candle's opening is 1.08585 and it knows that the candle's close is 1.08626. When you want to compute an algorithm to reject off of an area, and you can't just always make the algorithm reject off of one area, guys, because if you make it reject off of the opening every single time, everyone will clock onto what the algorithm is doing. The market is smart. There are very smart people behind the market. Corrupt, if you'd like to say. They could be the elites, whoever it is. But you can't let the majority realize what the market is doing, which is why you can't compute it to do only one thing. You will compute it to do a few things. The opening and the 50%. Now, why not just the opening? The 50% of the candle changes depending on how big the candle is, right? So the 50% of this candle is here. This big green candle, the 50% here. However, the 50% is only here for the small candle. Retail traders will never ever realize that until they're brought to the light. You guys will only realize this because I'm bringing your attention to it. That's why the algorithm imbalances every single order block, mitigation block, breaker block, all those type of things. That's you'll see that there is either reaction within the opening or the 50% between the opening and the 50% of the candle or area if it's a few down candles making one order block. That's why it sometimes reacts off the 50%, guys. Yeah? So back to what happened on Monday. We create this order block. At 5 a.m. we create this order block, and I've told you about the kill zones 2 to 5 a.m. This is your reference to time. This order block was created in a time that we're happy with. We come back and we test this order block, and now we're moving away. We found quote unquote support at this order block because the algorithm considers this as a discount, which I'm going to go into. This is a discount order block, and the market doesn't want to go below it. It's accumulating orders within it, and what happens? The market drives up higher. when it makes this drive up higher, what did this candle leave now? This candle leaves again what? What did big candles leave behind? They leave behind imbalances. This candle wick is the end of the imbalance. We see it come down into the imbalance. Yeah, we go just a little bit down, maybe like 1 or 2 pips, whatever. And then we see that we shoot off. Whilst it's coming down here in the retracement, it's doing two things. The market is smart. It's doing two things. One, it's rebalancing the imbalance. Two, it is inducing sellers into the market. People are seeing this area as a support area now. Retail traders will outline this whole area because look at the wick here, the candles here. This is all relatively equal, right? They will be outlining their areas of support and they'll be seeing that, yeah, this is just a fake out. Now we're coming back down. It's inducing sellers into the market. It's bringing that liquidity into the market. But what's the bigger picture behind that retracement? The rebalancing of the area. And then what happens? We shoot off. Now, once we break this high, this becomes a bullish breaker. This candle's body, the close of the body, the close of the candle, my bad. When we break up higher, when we break above it, this candle breaks above it. This candle retraces, the wick comes straight into that body, and we shoot off higher. We shoot off higher until we get to the weekly imbalance. Now this right here, I'm gonna show you guys how rigged this market is right now. This is Wednesday, the 9th, and Thursday was the 10th of March. This is Thursday. The left is Wednesday, the right's Thursday. This order block was in the market and it got tested perfectly on the Thursday. I want you guys to pay attention to the time. Let's go Forex Factory. 12:45 p.m. Yeah, remember that time, 12:45 p.m. When we're coming up from here, there's loads of people. There's this support here, and what we're doing, we're taking out the liquidity. We're taking out the liquidity. Yeah. Then what happens? This is all a rig for the news. Yeah. This is at 12:45 our time, so we need to go back 5 hours. If you go back 5 hours, this is at what, 7:45. At 7:45 on my chart, that is when this happens, yeah? So let's find 7:45. This big candle right here is 7:45, the news event. Now, we come down into this order block and we find support for the news. We're finding support and we're rejecting off of it. We reject off of it once, twice. At 7:45, the news event is used to fill in our overall weekly objective of the gap. Then what happens? We run the highs, yeah, all these highs here, we run the highs, and we're on the retracement down, we break the low. That is the market structure shift I've been teaching you guys in chapter 1. And this pattern is so damn important. It happens on all time frames. It happens on every single time frame. And I'm going to bring your eyes to greater detail on how to anticipate where this market structure shifts happen. Because it's right in front of you right now, but I'm going to break it down even more for you guys. Yeah. On the retracement down, we run these highs and then we run a low. When we run the high and run the low, that's a market structure shift. This candle is your bearish breaker. This candle right here is your bearish breaker. As well as here, this is your imbalance. Now, I sent in the announcement section. Let's find it. Oh, come on. Sorry for this. What's going on? Just feel free to skip ahead when I get to the Discord, but I want to show you guys something that was on the Discord. I think it was on the chart analysis chart sharing. Okay. Remember I said I'd personally take this, yeah? Let's look at this. What is this? What does this look like? Remember this, yeah? What does this look like? Was it not this? Was it not this? Was it not something like this, right? It was that, yeah? The reason being, because there's a market structure shift. So what do we look for now? We look for shorts, yeah? That's what we're looking for. We see there's an imbalance here that needs to be rebalanced. And look how smart the market is. The market will engineer this consolidation. This high will be consolidated, engineered. The market would use this to create liquidity. There's now liquidity above this high. The market would then create these highs, and there's liquidity above these highs as well. The market goes down lower, goes higher, grabs this imbalance and this breaker block, and it breaks down lower, and that's the end of this week. What I want to show you guys now, this will bring it to light a lot more. So what I've done now for you guys, I've purchased this. So let's go on here, on this one, let's go on the weekly. Yeah, let me delete this. And let's do playback. Let's play back. Let's play back from here and let's watch it. How do I do this? Okay. Let's play back from Tuesday, yeah? Watch. Let me delete these. Okay, wait, what's going on? Okay, let me just exit this. One sec. One second. I wanna put it for this as well. Okay, you can see. Okay, wait, let me just. On here, yeah. All I want you lot to focus on is that this weekly imbalance, this line. All I want you lot to focus on is this line, yeah. This line. That's all I want you guys to focus. Let's see how it. Let's see how it traded. We hit that now. Now we've hit that. Let's slow it down. Now that we've hit this, what happens? This imbalance is closed now. Let's see how the market acts when this imbalance is hit on the weekly time frame. Breaks down lower. Market structure shift. Any retracement into a gap here is a good short area. So speed this up a bit. Breaks down lower, breaks down higher, comes up higher, and it rejects off of it. And we finish the week. Do you see how having your higher time frame target frames everything? Because all the market done on the Monday, Tuesday, and Wednesday, and the start of the Thursday, is reach into this. Remember, we wanted to see this area get rebalanced. When we see that Tuesday is reaching higher, we have to look for what is price reaching for? Price isn't going up for no reason. It's not going up just because it wants to go up, guys. It's going up because it's drawn to something. What is it drawn to? On the higher time frames, let's find what is drawn to. It is going to close this imbalance. Now, when it hits our imbalance, you want to see, is it disrespecting it or is it rejecting off of it? We saw a rejection off of it. When the rejection off of it came, what happened when we rejected off of it? On the lower time frame, we saw the market structure shift down. So what does that mean? That this indeed was the objective that the market wanted to retrace into. This was all a retracement into this, and when we rejected off of it, the market has no willingness to go higher because it ran these highs and then it's now attacking the sell stops on the low time frame. So what do? We look for our area to get short. We have the breaker and we have this imbalance lined up. It's just a waiting game now. Now it's a waiting game. It will get there. It will get there. It's literally just about patience. Here you're thinking, yes, it's going up in there. No, it's coming back down. Let me just short it. No, you don't do that. It will come there. Trust me. It came up right to it and it breaks down lower. This is why I say have this feature. Upgrade the trading view and have this feature because you can see where you are on the higher time frame and then you can see how you're reacting off of your higher time frame, order blocks and imbalances within this lower time frame. When you're reacting off of it, look for the market structure shifts. Look for them. They will happen on lower time frames. If it's a 4 hour, on the 3 minute or 1 minute, there will be a market structure shift, for example. They were using the weekly, so the 15 minute is low enough in comparison to the weekly. Then you want to find your market structure shifts. Once the market structure shift happens, you look for any retracement to get short. OTE, for example, you could have used that. But this imbalance was very clear, lining up with the break hole. Hence why I sent that into the group. Do you see how the market how the higher time frame dictates where the lower time frames go, how the Monday, Tuesday, and Wednesday, and we made the high of the week on the Thursday. Now let's talk about high of the day. I'll give you a fast forward into the intraday teachings we'll go over in chapter 4, I think. The high of the day is reliant on what's left in the market on the high time frames to complete. We saw that imbalance was still there on the Wednesday, so the Thursday still has some sort of propensity to go higher. And the next day is the Thursday, so we can assume that if it touches, if it fills that gap on a Thursday, that's the high of the week. The imbalance is closed. It doesn't need to go higher. Then we reject off of it. Then we reject off of it and we break structure and we get in on a retracement and we short the pair. That's the Forex. Now, I was looking at this pair as well. So I think Solana, I think that's what it's called. If we go on the daily, right? No, it was Luna, my bad. Luna, yes, it was Luna. What do we see here? Failure to close above of it. We attacked this external liquidity on the weekly, and now we're coming back down. Textbook shorts, very textbook shorts. We ran this high, and we're breaking down lower. What do you see happened here? This candle filled this candle's imbalance because this candle was a big down day. So we need to rebalance it here, which it did, and we're coming down lower. Let's go down another time frame to the 4-hour. What do we see? This is what I call a market maker sell model. This is the top of the market maker sell model. I am, from how I look at the market, Luna will be retracing up and coming down. It'll be coming up and coming down until at least this gap here, 55. It's very early that I've clocked onto this pattern. And I believe it will come down hard. If you go on the 2-hour, what do we have? We run it up, and what do? We run down lower. Market structure shift on the 2-hour time frame. On the 1-hour, it's even cleaner. What do we have on the 2-hour time frame? There's an order block, and there's this gap. Yeah, from here to here, this candle all has a gap. I want to see a retracement. If it does retrace, retracement into the gap and break down lower. If it breaks the highs, likely to go higher. But I'm not assuming it to break the highs. I'm assuming it to retrace into this candle and break down lower. This is a market maker sell model happening. Euro USD, what I'm seeing long term for it, let me just clear everything. This is a market maker sell model. If you look at this, yeah, look at this. Yeah, it's not a double top. It's not. It's very different to a double top. Then we go to Luna 2-hour. Is it not similar? It's very similar, right? Because it's a fractal model. Now that we fill this gap, remember I've been speaking about these lows for how long? Maybe a month. These lows, I'm wholeheartedly sure that these lows will go. I'm looking to attack these lows. We fill this gap, I wanna see these lows go. Then that's the end of the market maker sell model. We have lows here as well. But the first ones I want to see is these lows get violated, ultimately this low. And then I want to see if price will go out further to take out these lows. As low as it goes, I'm happy because I'm looking for shorts. Yeah. DXY looks like it's looking to seek this liquidity. Where is the next highs? Where is the next pool of liquidity? Above this high, above these highs. Look at these wicks, right, on the weekly. These wicks, 1, 2, 3. They're very equal in their height. On the lower time frame, they are, quite equal tops on maybe the daily or the 4-hour. Price is looking to take that out. So that's the end of the weekly commentary. What I done with the Euro USD, how I had the two screens, and I showed you how when the weekly objective was met, there was a change in the market's delivery, state of delivery. We went from bullish to bearish. We were bullish till we closed this gap, and then we became bearish once that gap was closed. Showed the market structure shift and the entry with it. It's so simple when you break it down. You always want to have a reference to the higher time frame. Always have a reference to the higher time frame. You saw how I do it. I have the weekly reference, or I'll have a daily reference. Yeah. Then the lower time frames, you want to see the lower time frame go into that higher time frame reference and how price reacts off of that reference point. That's how you frame your setups. Have a higher time frame narrative. And that's what I've been doing this whole chapter 1. The market structure shift is fractal. The data ranges that I showed you guys, those are used on the daily for your long-term biases. When there's a market structure shift on the 15-minute, for example, you want to see the market structure shift happen in your bias's favor. If you're bullish, wait for price. Whenever you're bullish, you're waiting for price to always retrace down. You're not gonna buy it as price is going up. I'm not teaching you that. It's common sense. When price is going up and you're bullish, you wanna buy it low. So you wait for the retracement to come and then you go. So when you're bullish, you wanna see a market structure break to the upside and then get in on the retracement when it comes down again, and then it will shoot up. That's how you want to frame your trades. Yeah. Look at the Euro USD 15-minute and the weekly. Study this yourself. Study it yourself. When this price, so have this lined out, this imbalance candle right here, this wick, line it out and see how price reacted when we touched it and the market structure shift on the 15-minute. Go to the 5-minute if you'd like. I don't know what it looks like and then look at the 5-minute. But do it yourself so that you can see it. Don't expect me to always spoon feed you. I'm showing you it as well, but you need to do it by yourself as well, because then you would learn even more. You'll see it yourself. Make notes of it. Practice. It's all pattern recognition. You need to recognize when these patterns are happening, and always have your reference to the higher time frame. You would have never known that's gonna happen or anticipate it if you didn't consider this imbalance close. Remember when I saw that this imbalance close? What did I say on the DXY? When this gap got closer, we reacted. I said I'm now bullish again on the DXY because we closed that gap and we rejected off of it heavily, right? Anyway, that's all for this weekly commentary. Any questions regarding the weekly commentary or what I spoke about Luna? Hit me up. Ask questions in the question section, or Snapchat me if it's you don't want to ask in public. That's fine. Until next time.